We're in the home stretch of the Q4 earnings season. This final stretch, normally dominated by retailer reports, this time around, not a difference. Same thing applies. Our research director, Shiraz Mian, is here with me now. Take a final look at the strong earnings picture for the fourth quarter 2025 earnings season. Shiraz, has the retail sector shown resilience and growth?
I believe so, Terry. Yes, it's been a challenging environment for some time now, and the group on the whole has done a fairly good job. So, about 5-6% earnings growth, about a little higher on the revenue side. So far so good, I would say.
You know, published reports show that guidance in that group has been a bit mixed. I know Walmart, for example, flagged headwinds in their guidance. Is this mixed guidance picture a concern?
This is almost become a recurring theme with the conventional retail space in, I would say, in recent years, Terry. The There's always something that the conventional retail will complain about. I'm not terribly concerned about the Walmart guidance issue. I believe it's more of the inherent conservatism of the new management team. They're practically firing on all cylinders. Like the internals of the report are very, very good. In fact, some aspects of the report uh, encourage the outlook for the coming periods far more than what their guidance suggests. On the whole, the stocks pullback in response to that so-called mixed guidance is more a function of sell the news after the stock's very impressive gains, not just in recent days, but practically for some time now.
Any way to gauge tariff impact on sales for Q4?
Yes. So it's again one of those things that has become a recurring theme. Um, the likes of Walmart, they have the scale and the scope in their operations that it's possible for them to do better than some of the more trade exposed names. But it has been an issue right from the get go. The You would recall Procter and Gamble complained about tariffs as an issue. 3M mentioned it. It has been a recurring theme, as I noted on the earnings calls for a variety of sectors, and I would expect this to be the case to the remainder of the reporting cycle as well. I have long been of the view, Terry, that it's a net negative for corporate earnings. It's a headwind for margins, and not and there's no other way to describe it but as negative. So we do see it in the Q4 results as well.
What do these retail earnings say about the economy overall, especially in light of the recent GDP data showing that U.S. economy grew slower than expected in the fourth quarter?
Yeah, that's a great point, Terry. The economy has been there's way too many uh, question marks and issues that have been floating around. As you know, Q4 was a little problematic because data was kind of patchy too because of the government shutdown and what have you. Um, there has been a modest slowdown uh, in the macro, and we see some of that in the retail sector results as well. But if you step back from it, the overall growth and demand trends uh, remain stable and positive. You see that in Walmart's results, you see that in Amazon's results, you see that from a variety of other consumer facing industries and sectors as well. There are pockets that are under more pressure and stress on, on account of the cumulative inflation that has built up in the economy. But in the aggregate, spending still remains positive and stable, and companies that are able to execute are still showing pretty solid results.
All right. So, what does that big picture scorecard look like?
So we now have 96% of the S&P 500 companies reported results already. Earnings are up 15.1%. Revenues are up 9.4%. 74.8% are beating EPS estimates. 59.5% are beating both EPS and revenue estimates. The beats percentages, particularly on the earnings front, are a tad bit on the weak side relative to other recent period. But on the whole, Terry, we see an accelerating growth trend, particularly on the top line, but even on the bottom lines. It has been, on the whole, a very strong earnings season.
How many sectors have reported net profit margins in Q4?
So profit margins have been problematic. Some of it ties to the tariff question that we were discussing earlier. As you know, we have 16 sectors versus the 11 that the Standard & Poor's official global industry classifications have. Of our 16, 9 have margin pressure. In the aggregate, margins are just a tad bit higher compared to the same period last year, but are modestly below what we saw in the preceding quarter. Tech has been a positive contributor to margin gains. You take tech out, margins are a bit down, both sequentially as well as year over year. So the tariff question that you raised earlier, Terry, is very closely tied to the margin question. So it's a very important point.
You know, the S&P was on track to report the highest net profit margin in more than 15 years. Is that still the case?
That's still the case. And a big reason for that is tech, and then the improving and positive outlook for finance. Finance, as you know, Terry, combined with tech, accounts for more than half of S&P 500 earnings. So if you have the outlook for these two key sectors turn positive, that's more than sufficient to offset all the pressures you may have elsewhere within the index. So tech is a big contributor to that record margin outlook, and finance is helping too. But there is a lot of churn, and there is a lot of pressure if you look at the sector level.
So, what's going to be the bottom line on Q4 earnings growth?
So, as I noted when we were discussing the scorecard, about 15% earnings growth, since not much is left at this stage, I would say the number will be close to that 15% mark, with the top line, the revenue line, at close to 9 to 10%. So some margin gains, and then a big chunk of the 15% earnings growth coming from revenue growth.
And what does the growth picture look like for the first quarter of this year?
So that's one of the positives that you have to describe as you look at the Q4 earnings season as a whole. is how the revisions trend has unfolded as these earnings results have come out. The expectation is about 11% earnings growth, Terry, in Q1. That's a tad bit above where it was on January 1st. We don't usually see the growth pace or estimates move higher, even modestly, as the quarter unfolds. This has been a theme in recent quarters. In fact, Q1 will be the third in a row of this positive revisions trend, and that's why the macro takeaway from the Q4 earnings season has to be positive about the economy, irrespective of what this macro economic data shows. At the end of the day, earnings are as important and key a contributor and predictor and proxy for the broader economy as any. And the earnings picture remains very good and improving. So not just backward looking, but also reassuringly favorable on the forward looking front as well.
All right, soon we're closing the books on another earnings season, but in between these earnings seasons, you can always check out Shiraz's written commentary, accessed right on the homepage of Zacks.com. With Shiraz Mian, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.